Hello and welcome to the Crypto Jungle. My name is Baloo, and here on the channel I keep crypto simple. So if you're wanting to learn the Wyckoff method, if you're wanting to learn how to read price structure and charts and make a more educated approach to the market, both from a fundamental and technical point of view, then hit the subscribe button down below. New content 3 times a week, Monday, Wednesday, and Friday. So today's video, I'm going to talk about a Cointelegraph article. Just kind of, it's not a big article or anything. It's just something where they talked about a short squeeze. So there might be some people that don't really understand the intricacies of a short squeeze, how a short squeeze works. We are seeing on the Bitfinex shorts, shorts begin to pile up against Bitcoin. Sometimes this can be interpreted as the market is very bearish and we are going to head to the downside, but most often retail is wrong and it's adding fuel to the fire for an upside move, and I'll explain how that works in just a sec. So without any further ado, let's just go ahead and take a look at the article here. Just a quick overview. I'm not going to read the article in detail or anything like that, but basically, you know, Bitcoin dipped below 33K. The shorts began to spike. Traders warn of a violent BTC price squeeze. So basically, everybody thinks we're going to go down, and it's not outside of the realm of possibility that we head to lower levels, but most of the move, most of the profitable tradable move is gone. You know, you missed it as far as the short side is concerned. If we do head to the downside, it's not going to be this crazy volatile meltdown like we had at the original, at the beginning of the shakeout. It's going to be just kind of a tick to the downside. That's kind of what I would be looking for. No significant violence or anything like that, because we don't have enough open interest to really get those large moves to the downside. What caused the meltdown to begin with, what caused the shakeout and those huge price candles to the downside, is open interest where long positions needed to be closed at market. They get a margin call and they're forced to close or liquidate, a liquidation. So if you don't have that sell pressure anymore, you don't get those huge downside moves. But anyways, this trader continues to talk about shorters failing to spark a Bitcoin rout. I don't know what he's talking about here, but they do reference the Bitfinex shorts. So you know what, that's enough for the article. I just wanted to point out that we're talking about Bitcoin shorts today. So let's go ahead and take a look at the Bitfinex shorts. So as you can see, shorts on Bitfinex are beginning to rise. Now, this is indicative of retail traders thinking that the price is going to go down. And what is special about this is, in the same sense that you can have a meltdown in price when the market is over leveraged to the long side, you can get a move to the upside with the market being over leveraged to the short side. So it could be kind of an indicator that we can counter trade this. Now, you know, certain things do have to fall into place for this to begin to happen. We need some sort of event. We still need some sort of move to the upside for this to begin to trigger and create this cascading liquidation event to the upside. What causes that? Who knows? We're one tweet away from that happening. But if we take a look at the Bitcoin price, we're in a little bit of a squeeze here, a bit of a price squeeze. How is it going, Gravy Train? Anytime you're in a squeeze, we have to resolve one way or another. So I know I said, you know, everybody thinks the market's going to go down, but we can't just assume it's going to go down because everybody does. But that being said, when you're trading, you do have to trade alongside the trend. So even though I'm kind of fundamentally bullish and there is a lot of things that I can point to that could show support being built here, I'm also not trading it to the long side until I get the long side confirmation. So it's, what am I doing? I'm doing nothing. That's what I'm doing. I'm sitting on my hands. You know, this market is more about seizing opportunities when they present themselves more than actually trying to force these opportunities to occur. Okay. So at the point at which the trend changes, we're going to be presented with an opportunity to play it to the long side. But until then, I'm just chilling. I'm playing Axie Infinity. Not actually. I got over it. I got over my Axie addiction. I still like the ecosystem, but I'm not playing it anymore. So what I'm looking for, basically, if we get a move, a breakout here, so like we got this down sloping line of resistance. If we get a breakout here on volume and a test, you know, I would be looking to see kind of a large move as the shorts have been stacking up. But again, you know, the solid confirmation of a trend change for me happens at 40K. So I'm not taking any long exposure in my trading account until we are at least above $41,000. So if that's not you, if that's not how you want to play it, hey, you could buy this breakout area as, you know, if we get to the area of the a break of the down sloping line of resistance, you can play that. You know, I might play a little as well, but it's not a lot of fuel in the tank. So the real move comes after you break the macro resistance, test it, and then you get a real move. That's when you break the all-time highs. That's when you change the macro trend, the macro perspective of what's going on here. So the big moves are what I'm most worried about. Those are the ones that I want to be a participant on. So the easiest way to participate in the large moves is to wait for the setup to happen, and patience is a hot commodity amongst most new traders. They don't have a ton of patience. Moving on, let's take a look at Ethereum. There's a couple other coins. You know, everything's, yeah, I wouldn't be surprised if we see Ethereum, you know, come down and test again. All these coins are just kind of meandering around at this point. So, you know, a huge move coming, potentially, but we need a little bit of fodder. We need a few things to fall into place before we can get those new moves. Taking a look at Bitcoin dominance. Bitcoin dominance is beginning to curl over. This is kind of, you know, showing that the strength is returning into the altcoins, and we're seeing that. You know, when we were back here, it was tough going to be an altcoin trader, very tough. And now we're kind of flattening out. The rallies are shrinking, the reactions are deepening. So as far as Bitcoin dominance chart is concerned, this is looking more favorable for the altcoins. And we're seeing that in the altcoin space. We're seeing a lot more follow through, and some of these setups begin to present themselves. Nothing amazing in the altcoin space. One coin that has recently grabbed my attention, well, not recently grabbed my attention, you guys know, it's AXS. AXS is just ridiculous. So I made videos in the past that, you know, talked about the price targets that I have for this being around $16. Those were price targets that were determined by point and figure counts. Point and figure counts that I didn't do. Shout out to Christian, one of my VIP members who did that. Very good call. We found a lot of supply show up at the $16 mark, but you know, just because you reach a certain target doesn't mean you go and short it, okay? We are in an uptrend on Axie Infinity, on the AXS token. So you need to wait for the transition. Again, you need to wait for that trend change for you to be in a position to be looking to short it. There's a lot of people in my group wondering when to short AXS. If you short it an uptrend and it turns around on you, congratulations, well done. You have a horseshoe up your ass. But if you want the actual trade, you have to wait for that trend to change. So right now the trend is up. Axie can just keep going up. The price is irrelevant. So don't try and stand in the way of a freight train. Axie's going up until it stops going up. So please be careful out there if you are chomping at the bit to short this one. Sorry, I got a little clearing of the throat. Just getting over my infliction. Yeah, so we touched on Ethereum, Bitcoin dominance. You know, that's pretty much it. A couple of the DeFi plays are beginning to show some strength here. So AAVE is beginning to show a little bit of a recovery, but we do need to get above this area of the support / resistance, which we're not currently above right now. So actually, AAVE doesn't look as good as a lot of people think it is. I mean, we got a nice rally here. The rally was, you know, about, nearly 100% move. So that gets people really excited when there's a 100% move in something. But it was a 100% move up to the underside of resistance. We've got some pretty staunch resistance here at around 350 to 320. So, if we get a break above would be a good signal, actually. As long as we're below this line, I'm bearish. If we get above, I'm bullish. So it's sometimes really that simple. You don't need to overcomplicate your analysis. Overall, the structure, we're seeing the demand come back in the volume. We're seeing a retraction here, although it's not a retraction on support, it's a retraction underneath resistance. So since we're seeing a lack of volume underneath a resistance point, you could interpret that as not enough demand to clear the crucial levels. So proceed with caution on this one. I want to see a break. I want to see a solid break above $300 before you get too excited on AAVE. If BTC goes to 20K, what type of demand would it need to break all-time high? Amazon or Apple buying BTC? It's kind of an interesting question. If BTC goes to 20K, I think there's a lot of people just waiting to buy at 20K. There's a lot of money on the sidelines. Let's actually pull up a chart. Let's go to USDT.D, Tether dominance chart. And with this chart, what I like to do is I like to take a look at the RSI. And we are on the daily, yep. And basically, what you're looking for is you're looking for Tether to get into this range here. So this is basically loading the cannon. So let me just erase that, don't need that. We got into the overbought condition of Tether. That means Tether became overbought. What's the use of Tether? It's meant to protect your capital and allow you to deploy upon the next opportunity. So as far as Tether is concerned, there's a lot of Tether on the sidelines because we haven't seen the injection of Tether go back into the ecosystem. We haven't seen we haven't seen volume. There's been no volume in the market, period. If we go and check the BLX, which is a great chart to reference on Bitcoin when you're trying to interpret volume, BLX, the downside to the BLX is it's a daily chart only. That's its lowest time frame. Fallen out of our channel, which is bearish. Excuse me. But yeah, the volume is just cascading. We have no volume. It's just nothing but down. A few spikes here and there as we tried to hold support in this area. Excuse me. And then a little bit of a rejection here. We saw some supply come in. But other than that, the trend in the daily trading activity is down. There's less and less people trading. There's less and less people buying. There's less and less people giving a shit. So we're waiting for that to come back in, and that's going to, whatever we're waiting for, whatever the whales are waiting for, whatever the market is waiting for, whatever the composite operator is sitting on the sidelines waiting for, has yet to occur. We have not seen that event yet. When that event triggers, we will see what context that event triggers. Could it be Amazon? Could it be Apple announcing putting Bitcoin on the balance sheet? Only time will tell. But right now, there's not a lot of action. And, when there's nothing to do, the best thing to do is nothing. Why is Coinbase Pro not allowing market buys on USD/USDT? I don't know. I don't use Coinbase Pro. So your guess is as good as mine. Any take on GBTC unlocking this week? Well, it's the same as any market. I don't put a ton of value on the GBTC unlock personally, because you're going to have a pool of investors that bought it because they like it and they want to hold it for the long term. You're going to have a pool of investors that bought it for the terms of the terms and conditions of the duration of the contract, and they were going to sell it regardless. And you have those that are going to make a decision upon the date of execution. And the ratios of those like everybody's different. We're all people. So, you know, people are going to buy the GBTC Trust shares for different reasons. And when it comes time to the point of execution, they're going to sell or hold for different reasons. So there's going to be those people that are like, oh, wow, we did 300%. We're still 300% up on the trade. And, that's great. I'm going to cash out. And then there's going to be other people being like, wow, this is probably the future. I'm up 300% on the trade. I'm going to hold on to that. So what do I think is going to happen is as useful as me trying to predict what you're about to have for lunch. I have no idea. So it is what it is. Could this be like 2018 when it traded sideways for 6 months before collapsing another 50%? Of course. Yeah, we could. It's not outside of the realm of possibility. I don't think fundamentally speaking we're in the same sort of climate as far as the on-chain metrics. I'm sorry, I don't have any on-chain stuff kind of prepared, but you know, in 2018, at the peak of the run in 2017, there was tons of on-chain data showing you that everybody was dumping their coins. You know, the market was flooding with supply, and there was a dumping of coins. There was no more buying of coins after the fact. And again, I'm sorry I don't have the on-chain stuff. Maybe I'll do that for Wednesday's show. This is different because there is still buying. There's still buying by institutions. There's still buying by the whales and the sharks and the dolphins. All of those on-chain data points are showing us that there are differences between what is occurring now and what happened as a result of the blow off top in 2017's run. So a little bit of a difference, but is it a possibility? Of course it's a possibility. However, that possibility back then was also a liquidation event. So you had the longs going well over leveraged. There was a lot of the market that felt that we were at a floor. And that sentiment is also very different here. So back then, the floor was in. We were at the floor. So people were starting to add on to their long positions. They were buying futures contracts and adding leverage to the portfolio. We are not in that same scenario right now. Will we 4 months from now? Possibly. But right now, there's nothing to worry about. There's some pretty staunch differences between the two currently. I heard that the whales and hedge funds were starting to sell. Well, you better sell too. You can see it in the on-chain data. There are active new addresses. Man, I didn't know we'd be doing so much on-chain stuff, but the active daily addresses is increasing. The number of large addresses, like in excess of 100 Bitcoin, is increasing. So there's a lot of large money that is still accumulating that isn't dumping like it was in the 2017 blow-off top. Okay, simple question. Are we going to have a stock market major correction? Looks like the government is delaying that we will, with the MBS buying left and right. I mean, they're going to do everything they can to prop up the market, but the market has been propped up for like a decade. I would argue that the market has been propped up since the financial crisis of 2009. So, you know, keep this train rolling, keep this party going. They've been doing it since 2009. How long can they do it is the real question. Do you have a link for that information? It is available on Glassnode, so you do have to pay for a membership. I'll get something prepared for Wednesday. So Wednesday is a pre-recorded show. I'll do some on-chain stuff to show you. So if you aren't subscribed, and we'll show it on the Wednesday show. You know, Glassnode is a paid subscription, so if you don't have a membership to Glassnode, then, you know, don't worry about it. I got you covered, at least for that topic. We'll dive into it a little bit and talk about the fundamentals and the on-chain data and compare it to the differences that we saw back in 2017 in terms of the dumping of the supply that we saw at the end of 2017. Yes, Glassnode. Yeah, there's some free stuff on there as well, but yeah, you'll have to have a poke around on Glassnode. That is the go-to for on-chain data. Okay, that's pretty much it, guys. Just a little bit of a market update. I wanted to talk about Bitcoin, Ethereum. I did that. I wanted to talk about the concept of a short squeeze, how it is the opposite of these liquidation events where you get these cascading moves to the downside. You can also get a cascading move to the upside. I'm not predicting that that is going to be the outcome. I simply wanted to just address the news article referencing a short squeeze. So that's pretty much it. If you guys are interested in learning a little bit more about TA, learning how to trade for a living, this is what I teach in the private jungle. So links down below, 50% off your first month with the coupon code WELCOME. And that's pretty much it. If you guys enjoyed the content, please leave it a like. Don't forget to subscribe. And please trade safe. It is a jungle out there. Peace.